Everybody, thanks for joining the call here this afternoon. And as always, we try to keep this to a 10 or 15-minute call. You've got your day ahead of you, but we did want to give you a peek at what's on the economic calendar and coming up this week that could shape rates and shape the market. And so, as you know, today we haven't had anything on the calendar. Rates have moved negative here, actually, within the last hour or so. But really nothing on the calendar has caused that. Stock market's holding steady and up, down at 29 points. But it looks like rates are on the move negative. So we saw some price leaders out with about an eighth better this morning, so that will likely be coming back in. And mortgage backs are underperforming treasuries at the moment. There really hasn't been much of a change on treasuries, but mortgage backs have been weakening, certainly within the last 30 minutes, but that started about 2 hours ago. So we will, of course, keep you posted. But coming up on the week here, we kick off some data points tomorrow, actually. And really, as you're looking on the screen here, the most important of those will be PPI. And that measures prices at the wholesale level. Probably not as impactful as the next day's data point on potential inflation, but certainly a peek at what we might be seeing on Wednesday with CPI. But it could be a market mover, so keep your eye on that. It opens, that data point comes out an hour before markets open and rate sheets get set. So if you're subscribed to our rate alert service, you'll obviously get some notice from us if that does move markets. The rest of the day, capacity utilization, industrial production, we have one of those rated high. Interesting data points, but really shouldn't be market movers. As everything this week will be building towards the statement that comes out 2:15 on Wednesday from the FOMC, Fed statement on what they're going to do with rates, which there's 99.9% chance here they don't move rates, but that's not what the market will be watching mostly. They'll be looking for their terminology. Are there any tweaks in their statements specifically to do they plan on leaving rates near zero for an extended period of time? If they start to change that or tweak that statement extended period of time, which has been undefined, then that would be negative for us. But we'll see. Everybody expects the Fed not to do a thing and not to tweak their statement because the economy appears to just now be getting its legs under it, and they would be the last ones to want to take that out from under it. So we would suspect no change in statement, no change in rates. But Wednesday you do have CPI that morning, and so if that CPI, if it comes in a little hot, that would be bad for rates. If it comes in light, that would be good for rates, pricing. So really the best case scenario for us on Wednesday would be the CPI number that comes in less than plus 0.4, showing less inflation than expected, and then an FOMC statement that would be unchanged. That would be enough probably to pull us back within the range of 350 and under on the 10-year. But right now, everything's kind of holding there with the 10-year at 355, and we'll probably be waiting to see how PPI looks tomorrow, CPI and FOMC statement on Wednesday. And then we get some housing start data as well. Anything housing related right now is a high impact potential to any of the markets, depending on how housing starts look on Wednesday. And then Thursday, we have a couple data points, but really the most important will be the weekly jobless claims report. And again, expected to be basically the same. I believe, let's double check that, which would be up 475, and that is the case. So look for, minus 475 again for this week on weekly jobless claims. Anything outside that could be a market mover. So there we go. It's a compacted week. We're really looking at the most key data points are PPI tomorrow, CPI on Wednesday, and of course the FOMC statement on Wednesday as well. And oftentimes what we're probably seeing today is bond traders starting to hedge their bets against what might or might not be tweaked tomorrow or Wednesday in the FOMC statement. If bond traders will tend to, again, as everybody does, will hedge their position in the anticipation that maybe the Fed changes that statement. And that looks to be enough to be backing up rates a little bit. But we suspect nothing will change. At least that's what the professionals think. No change in statement, no change in rates, of course. And if that's the case, then we could get some of this worsening that we've had here today, and frankly, even probably on Friday. We could get some of that back post the FOMC statement. However, all bets are off if the FOMC does tweak that statement. There's really not much support on the 10-year, as an example, between right here, 350, 355, all the way up to probably close to 375, which would be a increase in pricing of a half to 60, maybe 3/4 in rebate. If the Fed, in my estimation, it would take a combination of CPI that's higher than expected. It would take a FOMC statement that was tweaked, and it would probably then, of course, take, which would likely come with all of that, stock market that is up from here. So that's what there is to look out for this week. Stay tuned, and if you are on our, you're probably on one of our services. If you're on this call, at least the market advisory that comes out once a week for the week ahead, or once a day. If you're not on the rate alert service that has an alert throughout the day, anywhere from, on average, to about 4 emails, or as many as 6, depending on the volatility of the day, so that you'll know when these events happen. If any of them have been impactful to mortgage pricing before lenders reprice, you'll want to get on that, and Josh has that link up here right now. So go to that rate alert service. Make sure you're signed up for the daily alerts if you aren't already. And then last, if you're not on our advocate program, and many of you are on this call, but if you're not, definitely get signed up for that. It continues to evolve and improve, and just the latest. And visit this page often. If you, even if you are with us and accredited already, you'll find the latest and greatest updates, and we, of course, email you as well, but you'll find the latest and greatest updates here. We just rolled out our Realtor program, and so there's an opportunity for you to network with folks, realtors across the country that have joined our mission as well. And then, and of course, they'll be looking for experts and mortgage advocates to partner with as well. So it's a great opportunity and forum for you to do that. And then last but not least, we've launched a beta of our lead program, and those are available only to mortgage advocates. And so if you're interested in receiving leads from consumers that visit our website, we get about 1,200 to 1,500 consumer visitors a week, and they are looking for help. And if you're interested in getting involved in our LEAD program, again, that page will have more details and links to the LEAD program itself. And we'll have more formal announcement, hopefully, on that this week, if not next week, on the availability of leads within the advocate program. Well, there we go. That's short and sweet. We'll go ahead and take questions if you have any. And look here in the queue in the chat log. It doesn't look like we have any, but we'll open up the lines.